Okay, it looks like that we've got the session started. So I will turn this over to Angie. Angie, take it away, please.
Great. Thank you very much, Joe. Okay, hello everybody, and welcome to our session of Best Practices of Fixed Asset Management. So today it's just a conversational, informational seminar. I'm not going to be demoing any products, but we'll have a follow-up of product demonstrations in the coming weeks following this particular session. So let's just get started. It's always nice to get started a little bit and about talking about myself. So just so you know kind of my background before I get started about talking about best practices, and so you can kind of understand where I'm coming from. I've had over 16 years of providing fixed asset services, consulting, anything from like conversions to figuring out what solution actually fits your needs and your requirements in your upcoming fixed asset project. And a lot of people kind of think that maybe it's just the depreciation that drives it, but a lot of times it's maybe a physical inventory that drives, you know, the project of fixed asset management, or perhaps it's more of the construction and progress accounting side, and they have big projects coming up. So we kind of sit down and do a kind of little mini discoveries a lot of times with clients, and I'm here to say that I'm not just the girl behind the desk or the computer in this instance, but I also go out into the field, and I've performed physical inventories before, managed those for clients, in-field training, also sit down and, you know, do policy writing and procedure workflow and that sort of stuff. So with that being said, the 16 years, I have experience in all of the SAGE fixed asset depreciation modules, which are the depreciation, project accounting, inventory tracking, and then all the three flavors of the government, nonprofit, and business. So we'll be talking about those today and how they kind of work together to complete a real true life cycle of a fixed asset and how to manage those. I will also work with a lot of clients on integration design. So for those of you that already use a SAGE accounting solution, there are integrations available to you for these products that you may or may not be aware of. And if you aren't and you're still looking for integration, we've built lots of custom integration bridges, if you will, to work with just about any accounting situation and solution, from the APPO to pull into the FAS system and then back to the general ledger. We've also used some integrations and created some to pull APPO into CIP. So there's lots of different ways that we can kind of design integrations around your needs. And then some other things we do, of course, is just workflow. A lot of times when people have fixed assets and they're bringing it in for the first time, it really does kind of touch more departments than just accounting. So we talk about that with people and we work through those issues. And that's kind of, you know, my background and where I've come along the way in the world of fixed assets. And just so you know, that's all I do. So I'm a very special breed. I love fixed assets. So, okay, so enough about me. Let's get into why we're here today. So just a little quick agenda overview for the next hour. We're going to talk about what are fixed assets and why they're important. And a lot of people will think, well, we know what fixed assets are. But sometimes it gets pushed to the wayside and they don't have a lot of importance, but they should. And we're going to talk about why they have such a big impact on you and why they're so important to track them correctly. So also some benefits of putting, when you implement best practices of fixed asset management, there's a lot of benefits that come to fruition. And so we're going to go over those today. Same with the life cycle of an asset. So before it's really a fixed asset, through the construction in progress, some buzzwords around that you might call it WIP or something else, to putting it into the placed in service and to depreciate the activity around the assets, and then of course disposing them and tracking them, the movement and where they are, and those sort of things. So also, and then we'll go deeper a little bit into the best practices explained on each part of that life cycle. And then if we have time, we'll go into some in-depth success stories that touch, I put some in there that touch part on every little life cycle of the fixed asset, from global communication to tracking it, you know, before it's an asset, depreciate, taking it through that full cycle and that sort of stuff. So, and then we'll, as Joe had said, even though I have FAQ at the end, I do kind of like to stop every now and then, naturally, as Joe calls it, just to take some questions about what we just talked about, because I know when I take webinars and things, I always have questions at a certain slide and then I kind of forget. So that's kind of how I process things, so I don't mind if you do it that way too. Okay? So let's dive right in. So we talk about, first off, what are fixed assets? Because they really truly are all around us. And we wouldn't be in business if we didn't have fixed assets. That's what fixed assets are. They help us, go into business, grow our business, and all those things. And without them, we would have no business. So they're the obvious things that everyone thinks, of course, so like computer equipment, furniture and fixtures, those sort of things. But then you could kind of dive deeper a little bit and think of, well, if I think about computer equipment, there's servers, there's server racks, right, that the blades fit on. There's the cords, there's the backup batteries. Those are really expensive. So it's not just the computer equipment, but it's also what houses the computer equipment that's a fixed asset as well. When we think about furnitures and fixtures, we're not talking about every single chair we have, but maybe if we have some executive roller chairs that are, thousands of dollars, which I've seen in clients' offices before. They are pretty fabulous chairs. Those are the kind of ones that we want to think about for fixed assets too. And the carpet and the lighting and those sort of things. And depending on your industry, those furnitures and fixtures might be, retail racks, mannequins, refrigeration units, that sort of stuff too. So, and then of course the obvious machinery and equipment. And then a lot of times people are like, oh, machinery and equipment, of course. But then you have to think a little deeper on a different level of that machinery equipment. And maybe it's just not that one piece, but maybe it's the 10 components that make that piece before we can produce the widget. And so are you going to that level of fixed asset thought process when we're talking about them or tracking them? Of course, leasehold improvements. And there's a lot of talk about leasehold improvements. Being in the industry for 16 years of fixed assets, I've seen a whole lot of different spreadsheets come across my desk. And a lot of times when I'm analyzing the data and reviewing it, I've noticed that they've kind of put in, some users have put in blanket rows of just leasehold improvements. But then when we kind of put our investigation hat on a little bit, and we dig a little deeper into that bulk entry that could be, let's say, let's just throw, $2 million at it, because I've seen that before, or just 500,000. When you look into the deeper levels of that item, you'll notice that there's lots of things in there that could be considered personal property, that could qualify for a shorter life and maybe bonus back in the day, right? And if that ever comes again, it comes back around, you want to make sure that you're capturing that correctly. Because let's say it was within the leasehold improvements, what I see a lot is floor, new carpet or new tile. Well, that's not really personal, that's not really real property, because we can replace it, because that's what you're doing. You're replacing that, carpet, and you're putting in something else. That's not necessarily classified as real property for 39 years solid. It's actually personal property, because I can rip it out and move it and take it with me if I really want to, and those sort of things. So those are kind of things that you have to think about too when we think about fixed assets. It's not just what are they and what's around me, but how am I really recording them? And am I recording those correctly? That's going to be the most benefit for me and my business. And then buildings and land and improvements. And I have the did you know there because it kind of goes back to the leasehold improvements. Did you know in certain buildings and improvements in certain industries, you can classify those property types differently. So like if you're a lead building, you'll get more benefits, and you can, book those assets differently depending on how it's built. So there's a lot of things to think about fixed assets. It's not just the things you see, but it's the things that are behind what you see and helping you with that. So fixed assets are everywhere. Everybody has them. And it doesn't matter if you have 250 to 250,000, it's still important to track them appropriately. Okay? This is just a little fact, U.S. yearly totals, and these are in the billions. And this is why I'm saying when we think about fixed assets and what are they and where are they, and what kind of importance do they really have, they really do add up really quickly and with a really big impact of grand totals over the course of years. So this is getting a little old, but they haven't. I keep looking for a new updated, analysis of this, and I can't find one yet. But basically, it really adds up. And if you're growing your business, then you know that you buy more fixed assets, and the longer you're in business, and the more you're growing, and the more they all add up. And if you're still in a spreadsheet environment, well, I was just having a discussion with a client yesterday, in fact, and Spreadsheets are okay, but a lot of people try to use spreadsheets as a database, and well, it always fails at the end because it's not a database, and we're trying to, kind of push it into something it's not. And so when we start growing all of our fixed assets because they add up quite exponentially, we kind of have to think about, well, what are we doing here, and could we be doing a better job managing these? So some benefits of proper management, there's quite a few, but the ones I like to point out and hit hard on are budgeting and forecasting of new equipment. Sometimes the economy is in a tough position, and you're trying to grow your business, and you're only as good as the fixed assets you have that get you there. So let's just take computers as an example, because that's the easy one everyone can relate to. So when I'm sitting here and I'm budgeting and forecasting with my clients about where are their fixed assets going in the next year, 5 years, 10 years, whatever, we kind of look at like the short-term versus long-term versus extended life of the fixed assets on their schedule. And then we go a little deeper, and then we think, okay, well, we can see that we have a lot of short lives left, like probably 40% of our total, fixed asset ledger is about short life. What are those? So we go a little deeper, and they're mostly computer equipment. And then, Susie over here in cubicle whatever, she's trying to do her job, and her computer keeps crashing over and over. So she's only as good and as efficient as her fixed asset is. So when we talk about budgeting and stuff like that, if we have a good system in place to where we can group the assets together and analyze our data a little bit better, all of a sudden we can see really quickly what we need to budget for, like new equipment. Maybe all these computers need to be replaced, right? So that helps us get there quicker if we have a good system in place to track that. And spreadsheets they really fall short. And some other systems do too. But so again, on budgeting and forecasting, if you have proper management in place, you'll get there quicker and more efficient and more accurate. Insurance overpayment. So if you don't have it, why cover it, we always say. Because it's true. If you've never done a physical inventory, and we'll get into that slide in a bit, but if you've never done a physical inventory, how do you know what you have? So I have a few clients that are in manufacturers, and when I first was introduced to them, I asked them right away, have you ever performed a physical inventory of your plant before? They've been in business for like 30 years, and they said no. And then they got a little sheepish. And then I'm so glad they didn't throw up. They looked like they could have. But so I said, well, wow, every time if something happens, how do you report back to your insurance? And when premiums go up again and stuff, how do you prove to them that you don't need to pay so much? And they don't really have a good solid answer. So again, if we're tracking them properly, and if we're accounting for their movement and where they are throughout their life cycle as well, then we have a better reporting system for your insurance payments. Which also goes to property tax if you have to pay property tax. I know nonprofits on here may not have to and stuff, but it's the same thing. So a lot of times we'll get clients to come in and their timing is really quick and they want a fast turnaround. And then I ask, well, what's driving this project and what's driving the aggressive timeline? And a lot of times it's because the property tax assessors are coming and they want to prove, do they still have this? And is it in this area? I mean, if you're in multi-locations and you struggle with property tax, you're not alone, obviously. But again, it comes down to properly managing your fixed assets and the movement of them so that you can quickly get the property tax people off your back. And I do say that because it is kind of a pain in the bum. So, we have to think about that too. And the fun fact here on property tax is people, on average, are usually over 12%. Now, if you do the math, if your fixed assets total, a few $1 million or more, and 12% is a pretty large number, right? A very large number. So I would be swallowing my gut right now. Another big thing is disaster recovery, another huge benefit of properly managing your assets. Claims are processed quicker is so true. So in disaster recovery, it's one of my success stories on the slide, so I won't jump too far ahead, but there's so many times where people, again, don't properly manage their fixed assets. They don't track them. They have them in spreadsheets, maybe multiple versions because of turnover. So things get lost on the wayside. And then what happens is something happens. They're occurring all the time, more so now than before. But that's a different topic. But for disaster recovery problems, everyone thinks, oh, well, I have it. It's all fine. Oh, where's it stored? On my server. Where's your server? It's in my office. What if the disaster happens to your office? What are you going to do, right? Everything's destroyed. Your spreadsheets are destroyed. Yeah, you could put it in the cloud, but was it accurate? If it wasn't accurate and you didn't account for the new things you just purchased, wow, is your insurance, it goes back up to the insurance, doesn't it? Is my insurance going to cover everything I just lost? How do I know what I have if I haven't properly been managing it? And it happens all the time. And so what happens, too, is when you don't properly manage it and something like that occurs, you can't produce reports back to say, no, I need the insurance money and this is how much I need. And maybe if you weren't up to date, you may not get back as much you need to start your business again. And then you can't open, and then that's really sad. So there's a lot of different benefits here about fixed assets. And then, of course, tax deductions. In some cases, it saves millions. I say that because I have some other really great success stories that's happened over the past 16 years. When we get proper management and we actually reconcile a lot of times, outsourced tax schedules, and then we reconcile them to their internal, GAAP subledgers on a one-to-one, all of a sudden we start seeing a lot of things pop out of the plate. So when I talk about proper management of fixed assets, I'm not just talking about an internal GAAP depreciation and subledger. I'm talking about the best of all worlds and all depreciation books in one system, in one place, so that you have better control over it. A lot of times what happens when there's mismanagement of fixed assets, especially outsourced, and then they try to bring it in-sourced, or they don't, they keep it the same way, what we've seen over the years is that assets forget to get entered, or they're not entered in the right time frame. And for tax reasons, with bonus floating out there over the past years, it was really important that you place it in service at the time it needed to be placed in service, so you could have missed 50% bonus as opposed to 100%. So, that's really important. Another classic thing we always see is that they bulk the assets together on the tax side. And so what happens is, going back to my leasehold example, where it was a bulked line item, but they were really doing their client a big disservice just because we couldn't see the details. And then when we started breaking down the details, we saw a lot more tax deduction and tax expense available that they didn't catch before. And then, of course, the disconnect between asset disposals. So we see that everywhere. So it gets back to another benefit of properly managing them all in the same house, in the same system, is that now you can have more tax deductions that really do come to fruition. So, anyway, those are some top benefits of it. And so are there any questions on these top benefits or anything I've said so far?
We don't have any questions as of yet. You're doing a great job.
Okay, perfect. I'll keep rolling along then. So now we're going to go into a true life cycle of fixed assets. So now that we've kind of talked about the benefits and what they are, let's get into, okay, well, let's talk about the whole cycle of an asset. So we have, I just put this, we kind of do a lot of little drawing on our inside to kind of keep fixed assets fun, which is a rather boring subject, especially when you throw software in there too, and we're staring at spreadsheets all day. So we try to make it a little extra exciting over here. So we kind of put this little flow together, and it's really about planning about your fixed assets, right? And planning doesn't necessarily mean it has to be one big project like a remodel or anything. Maybe it's just, getting stuff together for a big IT project. I mean, that could certainly cross the lines of construction in progress or WIP or whatever you want to call it. So the start of the thinking of what fixed assets do I need to move my business to the next spot, right, in the direction we're headed, that's when we start thinking about the fixed asset life cycle. It's before it's even really born, I like to say. And then, And then once we get it, maybe we're not ready to put it in service yet, so it's in a holding pattern. So that's kind of like planning on what we're going to do with that asset now that we have it as well. So that's kind of the planning start. So that is the start of the fixed asset life. Then once everything's placed in service, we're done with our project, or we're done collecting all our assets, now we know we're going to deploy it and we know where we're going to put it, then we start thinking about depreciation. This planning part is just as equally as important as the depreciation part, okay? A lot of people are in spreadsheet land here too, with multiple versions, multiple templates, multiple people touching them. You can't get a report. You can't do consolidations. If you have lots of projects, you know what I'm talking about. You know, it could take a couple weeks just to get a report to somebody on consolidated projects if you have a bunch open and you're not in a system that takes care of them properly. So when we talk about this too, integration of these systems are really important because it streamlines things and keeps it more accurate. And then it always has a historical you know, database to go back to even when that project's closed, which also gets us back to budgeting and forecasting. So we'll get into that in a minute. So then we have depreciation. Now we're rolling it along. In depreciation, we're still talking about federal tax, GAAP, state, AMT, and anything else that you may need to depreciate, you know, in a different book. Maybe different state with some funky methods or multi-currency or something like that. Okay. So within the depreciation, there's a lot of activity that happens there. We can integrate that with a nice inventory tracking system so we know the movement of our fixed assets, right? Where are they? Who has it? Is it out for service? Does it need service? Do I need to replace it? You know, we have it, but is it really being used, right? If you have multi-locations and your assets are moving around back and forth, it's good to know with tracking so that we can pull the depreciation and pull some tax reports, like property tax reports and stuff like that, too, from the system. You know, they're more accurate because things are getting updated over here. So tracking is like the movement of the activity of that asset when it's still in service. And then we get to the disposals. All right, we kind of put like a RIP here because it's a goner. Either we sold it, which is always kind of good, or it's a casualty, or you know what, we did an inventory, and I went over there to that facility building, and I found all these assets that were in a closet, and they're not being used at all. Why do we have them? They've been there. They have an inch thick of dust on them. I've seen that a lot. You know, dispose of them. Give them off your books, you know, and then go recycle them or something. But you would never know that if you didn't take the time to do an inventory. And then that's when we talk about ghost assets, is that they're on your books, but they're not out there, or they are out there, and they're not being used because they just don't work anymore. So it's a lot of house cleaning, which leads us back to our benefits of why it's important to clean our house of our fixed assets. And then, so that's the disposals. So it's from, you know, before we acquire it through the whole life cycle until we retire it and put it, you know, get rid of it. So let's go into the first one of project accounting. So before it's placed in service, there's a lot of buzzwords. I've heard it around different industries. Definitely have some different terminology going on about the same process. So buzzwords are capital project accounting, CIP, which is construction in progress, planning. I've also heard it be called CAR or CART, those sort of things. So it's all really the same thing, WIP, right? And if you think about those kind of projects, they can be a slew of things. It's not just, again, I'm remodeling, so I'm ripping everything out and then I'm putting new stuff in. It's not just about building a new building or a new wing to a hospital or something. And in some cases, it could be as simple and easy as, you know what, I'm in manufacturing. I'm building a CIP for every manufacturing piece of equipment I'm bringing in, because it takes 7 to 10 to 15 components before it's really placed in service anyway, and they're coming from all over the place. There's lots of moving parts for that. So I'll create a CIP project just for that machinery, so I can track it, progress payments on it, shipping invoices, tax invoices, and then at the end of the day, when they're all collected, and then it's being put together, because I also have to pay for it, the labor of putting it together, I can track that in CIP. Once it's done and it's now about to produce its first widget, Then I roll it all rolls up, then I move it over to depreciation. So it could be little projects like that too. So a lot of times we just think, oh, well, I'm having construction. Nah, that's not necessarily, I mean, yes, but that's not the only use for it, okay? So, and that's exactly what project accounting is. If we have a good system in place, we can have better track of our invoices, all of our progress payments, down to a certain level. So a lot of times I'll get people's schedules, and they'll come over, and they'll have line items on it that say, let's just say, for example, Windows, right? Windows. It comes over, and then you see Windows again, and it comes over, and it has another line item, and it has another line item. And then you see one that just says sales tax. I love at those because I just don't know what else to do about those line items. So it says sales tax, and then it says shipping, and they're really large, but really what you should be doing, right, is rolling them all up to the total cost of the asset. Because what happens later if you don't do that proper management in the CIP, when it becomes placed in service, you have to think about, oh, if I dispose of that asset or move it, I also have to find those other 5 line items and dispose of them and move them too, right? And depending on if you have turnover in your users in your system, down the road, they're not going to know that. So then all of a sudden we're back at ghost assets. So we really want to manage the assets and everything about them before they're placed in service. And if you have a good system, for like a CIP system to do that, you could track it there. It'll all roll up, and then you just push it to depreciation. When it's done, one line item, now all of a sudden you're only looking to dispose, you're only managing one asset item to dispose of and so forth. Okay? So also when I see people's data, I'm bringing it over, there's like, invoice number, and there's a ton of them in one area. And any system you go to, you will always be limited to character length. So, if you're keeping track of all of those invoices in the CIP for that project, then all of a sudden all your invoices will be there, right? So that you don't have to worry about bringing that over and getting it truncated or cut off. Because you can always refer back to the CIP project for historical purposes on any of those assets. All right? Many times when we're doing project accounting with clients, I always ask for a build-out. So a build-out lets us properly manage the fixed assets before they're assets because we can see line by line, okay, what asset class is this going to be and what is this going to be? If a contractor doesn't give you a build-out, then there's a problem there. So when we're in project accounting, it involves more than just the accounting department, but also the construction people who manages the construction lead, right? Also facilities or anything like that. So that, it really involves a bunch of those people and their input on how you would implement and manage your CIP projects better. If you do get a build-out from your contractor and it's really vague, you go back to them and you say, I need more of a breakout. Because if you don't, then we're going to go back to that prime example at the beginning where we talked about leasehold improvements, and you have one line item that says leasehold improvements, and everything's now classified under 39 years or 40 years for internal. And guess what? You're really missing out, right? So always ask for a build-out, but not just that, ask for a very detailed build-out if that's what your CIP is. And then detail your capital project template to keep better track. And that just means if I have a better template in place in managing my CIP, then I can repeat that template over and over and never gets messed up, where if you're doing spreadsheets or something else, some other solution that doesn't have that capability or control, right, then all of a sudden we have multiple versions and things just don't work and they don't integrate, and no one's speaking the same language, and when miscommunication happens, then that's where things tend to fail. So if you're properly managing them in a good system and solution that everyone has, access to within, that department, then all of a sudden you're more accurate and things will go a lot smoother. More importantly, when you have good proper management of CIP in a nice system that has reporting behind it, yay, you can get in and out much quicker, and you can make better business decisions about the next project that you're going to start. You'll start to, if you have lots of projects, you'll start to see trends. So you'll get to see and start to see a trend if a vendor started at X dollars and then the same project is now much more expensive, then you're just going to know that, oh, I'm going to have a conversation with them, and if that doesn't go well, then I'm going to search for a new vendor. So if that's a benefit of project accounting and keeping track of it and a good system is to ensure that you're making good business decisions for future projects. Okay? So that's project accounting. Any questions on project accounting?
Nothing here.
Perfect. All right. I must be answering all the questions as we go along. I could talk about this for days, I tell you. But I don't have days. So now, once we got the project out of the way, we're going to place everything into service and get ready to depreciate it. So I always say, ready, set, go. There's so many rules out there. There's over 300,000 rules and growing every day, I swear. With that being said, there's also over 50 methods of depreciation out there. So it gets a little overwhelming, I understand. But again, if you have a proper system in place, it takes more of the worry out of it and concern. Because what happens now is that you have a system that's helping you along the way, as opposed to kind of, flying by the seat of your pants on a spreadsheet environment. Also, when we place things in service, we have property types, the things that people don't think about. And that goes back to our planning phase or that leasehold example, where when we place things into service, we really do have to be a little more aware of what the property types are and what they really represent across different depreciation books. This stuff's written. Obviously, nobody wants to read it because it's a total bore. but you really want to think about that, because real versus personal is a huge difference out there. Why would I place something into service as real property when it's really personal, and now I have to sit with that thing for 39 years, and maybe it's only taking $25 a month for 39 years, right? Where it's probably not going to be here anymore because it's really personal property. I'm going to either replace it, or I'm going to dispose of it, or I'm going to take it with me, but I'm going to beat that thing up. Why would I want it at 39? You want to put it where it needs to be, in either 5 years, 7, 3, 10, depending on the asset itself, but you want to get that off your books faster, okay? So it's a lot more beneficial. Try not to outsource your tax. I say this all the time. Our accountants are really good and very trusted advisors. But on the fixed asset side, it's not necessarily your CPA that you're going to every day and have a relationship with. It's people in there that are maybe staff accountants and those sort of things that may not know the differences between these property types, right? So when they're putting your assets together, they're not really taking that into concern. They're just getting the numbers in and pushing them out into a 4562 at the end of the day. But they need to take better care. If you have it all under one roof, you're going to have a much cleaner set of data. You're going to be more confident that everything is accounted for, all disposals are intact, all cost adjustments to assets are taken care of across all books. I see that way too much, where more invoices come in, and they're pretty large. And where you, on your side, if you're in GAAP land, I'll call it, if you're in finance, and you're updating the cost of that asset to the internal book, that's awesome. But are we all on the same page and updating that for tax as well? Because if we're not, we're missing out on more depreciation expense, which puts more money back in our pocket at the end of the day, right? So I always want to suggest, and I always do, when people pull me in for projects, we talk about the path of their fixed assets. I always ask, where's your tax? Would you like us to bring that in now? And here's why I think we should. Because you'll always have a 1-to-1 ratio, right, of your assets. And when you move things around, too, it's always getting properly placed in that jurisdiction. Cost adjustments are fine, getting made everywhere. Disposals are getting made everywhere. Additions are getting made everywhere. So again, if that's not happening, it's pretty messy. There's not one conversion that's come across my desk in 16 years that were spot on when it was outsourced and they were separated systems. Not one. So 100% of the time, there's always a disconnect somewhere. And a lot of times, it's in the client's favor. meaning there's extra expense there, okay? And clean it up. So it's another thing to just kind of consider with whatever system you want to move forward with on fixed assets, okay? Which gets me to do not bulk your fixed assets. It is never a good idea because of situations like disposals in particular. If I'm bulking all my assets, let's say I bulked 50 computers together, right? Maybe they weren't all the same cost. When I go to do a partial disposal, how do I know it wasn't the most expensive out of the 50? Those Macs are pretty expensive. How do I know if I just didn't partially dispose of the most expensive or the least expensive? Am I really doing it right? You know, you'll never know if you're bulking your assets like that. You'll have no idea. Especially, you'll never know if you're not tracking them appropriately. So bulking is not a good idea. Again, when we get outsourced tax information, it's what we see probably 60% of the time is the assets are bulked by class, year, and quarter. So they're just bulked entries. And then we're trying to figure out, oh my gosh, well, if I took the internal subledger of fixed assets and then I did the same process, how come my totals don't add up? So another reason why you don't want to bulk your assets, okay? When we talk about best practices of how we enter our assets, we also want to think about descriptions. Do create great asset descriptions for your assets. If you ever do an inventory down the road, it's going to make your reconciliation process of what you found and what's on your books so much easier. You know, so much easier. I went to this client once. It was probably 10 years ago, honestly. And they wanted to perform an inventory. And I said, okay, well, let's take a look at your ledger and your descriptions, and let's start from there. They had no descriptions on half of their assets. They had the cost, which is obviously good. But they don't know what it was. They had no descriptions. Some that had descriptions were really vague. One said computer. That was it, literally. It had no make model anywhere. Nothing. So the more information you can gather about your fixed asset, the better. Just because now all of a sudden when someone says, where are my computer equipment, you know, that we just purchased during these, you know, place and service date range over in location A, how are you going to obtain that if you weren't keeping clean and accurate and, you know, I like to say description worthy you know, information about it? And then again, if you do an inventory, how are you going to reconcile that back, right? So things to keep in mind and going on now and in the future. And then I want you to think too, like, well, what does my ledger look like? What information am I keeping track of? And then ask yourself, if I were to perform an inventory because I want to get my insurance premiums down, or I want to make sure I'm covered if there's a disaster that occurs or anything like that, you know, in the state my data is in now, will I be able to reconcile back to it? So those are things to think about. And then if you have more than 500 fixed assets, I always say, and Sage also always says, there ain't no place for a spreadsheet, because how convoluted is that? A lot of times, too, we'll get spreadsheets and they'll have, you know, just even hundreds. I did a project that had 250 assets. The tax was even outsourced. So then we brought them together, and it was still a mess. There was a bunch of cells that weren't capturing some of the assets, so they weren't actually depreciating them the way they needed to, so they were booking their entries wrong back to the general ledger. And so everything was off. And so when we brought it in and we tried to tie back, like, you are so under-depreciated, which actually is good. But I would hate it to be the opposite, which I've seen too. So spreadsheets just get out of control. There's no, you know, there's no reporting. You can't really lock stuff down. There's lots of we have version control nightmares all the time. So, you know, you just think about that. If you have more than 500 assets, you really, and you're in a spreadsheet, you really need to think about a better practice of moving off there and getting into some sort of a system, you know, whichever makes sense for you and your needs, of course. But things you need to think about. And why do they always fail? Because they always have 100% error, always. We've never had a clean spreadsheet. what happens a lot too is if you make a cost adjustment to an asset in your spreadsheet, guess what? Your formula is not going to true that up. So every time we bring data conversions into the Sage Fixed Asset system, we do an analysis and we say, okay, before we even go live, we're going to run this analysis on those clients' data, and we're going to spot all the assets that are going to be over or under depreciated going forward in the system. And then before we even do anything, we clean that up with the client, and then we fix them. Because either you want to take the hit all at once, or if there's large ones, one client had 50 pages of these, then we picked a threshold and we said anything lower than 1,000 we'll just pick up now. Anything over that we'll do a remaining life over remaining value. So things to think about. There's other systems too that are fixed asset systems, obviously. But you have to be careful, and you kind of get what you pay for in the situation, because it goes to the cost adjustments or any adjustment on those critical fields, which if you do a 3115 change, right, you do a, it's like a method change. If you change the life, if you change the place of service date, you update the cost. All those things are going to affect your net book value, right? So in fixed assets, there's a life for every fixed asset for a reason. Once that life is over, that's it. There should be no net book value left. Every time we bring over from a spreadsheet or some other systems that are out there in today's market, they do not take care of those adjustments. So every time we do it, we always find over or under depreciated assets. We love it when we find underdepreciated assets in the tax side, because one time we did that for a client and we found $1.8 million in extra tax expense in 2008 for them. So that was a fun day. We'll talk about high fives. So that's why you want to make sure, if you are on a fixed asset system right now, you want to make sure that it's taking into account those adjustments. If you're a current user of the Sage Fixed Assets, there are adjustment settings. If you installed it yourself or somebody else implemented it, they may have forgotten that setting and didn't turn it on. But we can always fix stuff too. Okay? So that's depreciate. Any questions on depreciating?
Nope.
All right. I hope nobody's falling asleep on me out there. Okay. So some fixed asset activities now that they're in service and they're moving. So we talk move and retire. So transferring assets. A lot of times we'll talk about transferring assets in like a true asset transfer. It's not just like physically picking it up and move it. I mean, that's just a change in its location. A true transfer is we're stopping depreciation in company, location A, and we're moving it to a different cost center, and they're picking up the depreciation on their books in company B. That's a true asset transfer. We looked at someone's data, a few years back too, and they were using the transfer capability way too much. And what they were doing is they were performing the actual transaction every time they physically moved the asset, but it was still being depreciated in the same accounts. So that was wrong, and it really messed up their data, and it looked like a total nightmare. So that took a while to clean up, but you really want to think about what is a really true asset transfer. A lot of times it comes down to terminology and what people think they're in their mind, or maybe they're coming off of a different job that called that something completely different. Maybe you're coming off of SAP fixed assets and transfers completely different all over the place. It could mean 5 things. So, but really, when you're thinking about best practices and asset transfers, it's stopping depreciation in one place and it's picking it up in a different, on a different account. So not just physically moving it. Okay? So dispositions, I've heard that retire, disposals, that sort of stuff. Okay? Oh my gosh, no matter what you do, don't delete the asset. You might laugh on the other end of this phone line, but I've I've been told that they deleted the assets a couple times, especially in their spreadsheets or even in a system, and that was their method of disposing. So you never know who you're talking to on the other line. So just make sure you don't delete your assets. I think that's a bad word in fixed assets. Delete. It's a bad word. In fact, every time I implement the Sage Fixed Asset module, we put on security just, even if it's one user, we'll put security on and turn off the capability to delete because we want you to think through it slowly, right? Save yourself from yourself. So we'll turn that off. You never delete it. So obviously, dispositions, they're active only in the current year of disposition. So meaning you really only have to keep records and history of the disposals that you have in your current year that you're in, because you obviously need to report on those at the end of the year. You always want to keep a history of all times, but we're really talking about when we go into like reporting and things like that, we want to make sure that we're reporting on all the disposals within our current year of depreciation. Okay. Bulks, those sort of things, you want to talk about bulk disposals, especially if you bulk dispose on a sale. You know, you have to think about that, because if you have cash proceeds on a sale and you're bulk disposing your assets, are you allocating that cash proceeds accordingly across those assets you're disposing? I bring this up because it's a tax impact otherwise. Let's say you have 10 assets you're bulk disposing, either in your spreadsheet or whatever, other system, and even in the Sage Fixed Asset system. If you're bulking and to dispose those assets, and let's say, your cash proceeds were $10,000, did you put that $10,000 cash proceeds to one asset and then all that was only $5,000? Instead of spread it out evenly across the other assets by their cost? Because if that's what you did, come tax season and you report on taxes on that, it's going to look like a capital gain, and then you're going to be taxed on that gain. When actually, when you look at it all, it was really a loss. So you really have to think about, when you're disposing assets, managing that properly and managing the way you handle sales of the assets with cash proceeds. So. Okay, so basic stuff. I feel like I forgot a slide, like my inventory slide. But I know we're getting close on time. So, but the tracking all rolls up to everything. So we've discussed, the cycle of it, the management of it, the movement, and all the benefits of managing them, which also include the tracking and the mobility of those. If you're not tracking your assets right now, and I mean like with, asset tags that are actually on the piece of equipment, I would really, strongly consider that you think about that and adopting that project down the road, if not now. Typically, people look at the cost of implementing an inventory and they'll get sticker shocked a lot, but really at the end of the day, it really pays for itself, because you find all these things that aren't there, you're cleaning up your assets, you're finding things that should be on there. And when you clean that all up, the benefits are huge. Now all of a sudden you have better reporting for disasters, for property tax reporting, where things really are, and then it helps your insurance out, and so there's lots of benefits to that, okay? Success stories, there's so many to share over the past 16 years with managing fixed assets properly. Disaster recovery success stories. We have some where everyone was outsourced differently. That's always a problem too. When you think about best practices of managing your fixed assets, if you have multi-locations, are they all on the same system? Are they all on different spreadsheets? Are they on different systems? I've had one that had multi-systems with multi-spreadsheets, and then what a nightmare it was to all roll up. I mean, we talk about miscommunication. So, not only was it all outsourced differently, but are you keeping it all into the same boat, meaning in the same system, and then sharing that out? Tax saving success, we've had lots of those. And then, of course, the full asset lifecycle implementation successes, where they really cut back on a lot of time and effort. And because they had multi-systems, and they also had spreadsheets, and they had multi-departments. And that thing to consider, too, is that when you're thinking about the fixed asset lifecycle, like the whole lifecycle, it doesn't just include finance or tax. It also includes the rest of your team, IT, facilities, construction. Everybody plays a role, in fixed assets. And a lot of times we'll go in and we'll be the mediator. It's kind of fun, actually. We'll get everyone in every department that's affected by fixed assets, and we'll sit them at a round table, we'll have a discussion about what they think a fixed asset is, why they think it's important, and if they know how it impacts the other departments sitting in front of you. Then we'll have those discussions, and at the end of the day, everyone's on the same page. And we try to do that before we do large fixed asset implementation rollouts, just so that now everyone plays a role, everyone feels welcomed into that, and then when you do that, you find out that everyone else has their own fixed asset list too. So, and then, which is helpful because now we have more information available that we didn't know we had. So I'm going to stop there. I mean, I have a lot of success story, examples that I could dig into, but I know we're at an hour, and I just want to see if anyone has any questions at this moment.
So once again, if you have any questions, feel free to type into the questions box instead of the chat area, and I'll be more than happy to read those off to Angie. As we're kind of wrapping up here, I definitely want to say thank you very much for taking time out of your busy day and providing Angie your undivided attention and learning more about fixed assets. And at this point, I'll turn it back over to Angie. I don't see anybody typing anything in, so I'll assume that we're good, and I'll let Angie finish up.
All right. Well, thank you, everybody. I'll make sure that we, wrap up these spreadsheets. I'm not spreadsheets. I'm just thinking about spreadsheets now, where we can wrap up this slideshow, and so that you can see the other slides about the success stories on your own time and kind of what we found there when we started implementing good practices of fixed assets, so that you have a nice, documentation of today's presentation. And then if you ever have any questions or you want to just kind of have some time to chat and about your upcoming project or what you're thinking or anything fixed assets, please feel free to give me a call at that number. Is the best one that's showing right now. And you can always shoot me an email. I check them. I shouldn't say this, but I check them too often. So even on nights and weekends, if I so inclined. So please,
Angie?
Yeah.
We actually do have a question for you.
Okay.
Will there be a session on how it works in Sage?
Yes. So good question. So we thought we'd kind of kick off this fixed asset series with first informational and get you thinking about that. And then we're going to follow up with a demo, an online demo for the depreciation, an online demo of the CIP, and an online demo of the tracking as well. You can kind of see how they integrate with each other as well.
And this is not somebody asking a question, I'm just assuming somebody will ask this question. Do you have a time frame on when you think those will be happening? Over the next month, 2 months, 3 months?
Yeah, over the next month. Yep.
Okay.
If someone needs to see it quicker or they want to see all three at once for their particular situation, again, you can schedule those one-on-ones with me too. So sometimes those are nice if they have a lot of questions or a different kind of project.
And that question, the original question was from Joe. And Joe, thank you for asking that question. In fact, Ann has a question now. In your experience, how long does it take to implement an inventory tagging project?
Ooh, that's a good question. It really kind of starts at how many assets do you think you have? And when we say do you think you have, how many are on your ledger right now? And then if you have multi-locations. But it takes at least a good 4 to 6 weeks, depending, on average, 4 to 6 weeks to get it, the planning stage going. Keep in mind that if you don't have labels, it takes a little bit of time to manufacture those labels. So you're kind of sitting there. Some people say, oh, let's get started in 2 weeks, but it takes about 3 weeks to get your labels from start to finish before you have any labels to use. So that's I kind of do 4 to 6 to get it going. And then if you do it yourself or if you outsource it, obviously outsource it gets done much quicker because they'll put more people on the team to finish off on your timeline. If you do it internally, things to think about for internal fixed asset inventory processes, does your staff have time? Does your staff have the knowledge of what a fixed asset is and why we're tracking it? Do they have the knowledge of what they should be tracking and capturing when they're in the field? Do they have the time to do it, period, right? Is it something you're going to start and then stop and then start and stop again? So by then, the asset's probably already moved. So that's kind of a hard question to say, how long does the implementation take, depending on what route you're going.
Okay. I don't see anybody else typing anything in, so once again, I'll let you wrap up, and then we'll finish the session. And as Angie said, you should expect more invites out there in the next few weeks to a month or two or so about the other follow-up sessions that will be happening.
Absolutely. And again, I can always do one-on-ones too if that's something that you're interested in. So, okay. Well, I'd like to thank everyone for their time today, and good luck with your fixed assets. And enjoy some sun, hopefully, where you're at. So, thank you very much for your time.
Okay, everybody. Thank you, and have a great afternoon. Thanks now. Bye-bye.
Bye-bye.